We're joined now by a currency observer who is bearish, or at least cautious, on the prospects for the Canadian dollar. Adam Button, chief currency analyst with Forex Live. Adam, you essentially think the Canadian dollar is headed for 74 cents?
Yeah, the mode in the market has really changed in the last couple of months. We've seen worries about inflation switch to worries about growth really in record time. The market's looking out now, all markets, and saying central banks are going to have to tighten so much that it's going to hurt growth. Whereas a couple months ago, we thought they could manage this slow, gradual move. Now we're seeing a faster pace of hiking combined with harsher growth prospects because of China and because of global supply chains and the war in Ukraine. And all of that right now is creating a bit of a cycle that's feeding on itself of worry and creating deleveraging and a rush into the US dollar.
So 74 cents, that would be quite a drop. I mean, our central bank, as you know, is tightening. Why would we drop so much?
I think there's a really good question about how much we hike rather than how fast we hike. So the market's looking out and saying the Fed is going to get to 3% with risks above that. They're saying the Bank of Canada, when it gets to 2.5%, is going to encounter a whole host of problems related to Canadian housing and isn't going to be able to follow the Fed beyond that. So the terminal rate isn't going to get to where the US is. And I touched on housing as well. That's the other part of it. We're in the gut check moment. I think it's certain now that Canadian prices aren't going to keep rising. It's really a question of how much they'll fall and what the impacts of that will be on the Canadian consumer, the Canadian economy, so on and so forth. And I think we just have to get to some sort of base or bottom in Canadian housing before the Canadian dollar can be bought again.
That's interesting. And do you think there's pain in housing ahead?
You know what? Nobody really knows where house prices are going. Nobody ever imagined they would get to as high as they are right now. I think we're headed lower. I think probably in the bull case, in the good news case, they end up maybe 15, 20% lower from here. Now, what does that look like? Is it just found money and people sort of move on? What I do worry about is that we have about 30% of Canadians now on variable rate mortgages. Now that's up from 18% just 2 years ago. Mm-hmm. And every year about 20% of fixed resets turn over. So we're seeing this hit on the wallets every single month to Canadian homeowners. And that might filter back into the economy. And it might make Tiff Macklem say, hold on a second. And in a worst case scenario, we see dramatically falling house prices. And there's nothing really the Bank of Canada can do about it.
No, but, well, I mean, they could radically bring down interest rates again. But of course, that would be a violent U-turn.
Well, that's the issue. That's why Tiff Macklem has the toughest job of all global central banks. If that does unfold, and that's not a black swan scenario. That's a 10 or 20% probability. If we start to see that, they can cut rates, but the number one thing that drives mortgage rates for Canadians is the Fed rate, is the global bond market, and that's really set by the Fed. So if the Fed is continuing to hike, well, the Bank of Canada is cutting, it won't do much for the Canadian housing market. On top of that, if the Bank of Canada does go to that playbook, the relief valve will be the currency. So we'd see the Canadian dollar start to fall dramatically, and that would create its own inflation. And so the Bank of Canada will have to stick to its mandate. So again, there's nothing the Bank of Canada will be able to do or will do if that starts to unfold. So that is sort of the nightmare scenario for the Canadian dollar. Now, if that were to play out, and I think the bigger trade is that the Canadian dollar is in a great place for the next decade. The commodity run isn't over. Ultimately, if the Canadian dollar falls, there's going to be spots to buy it. And I think that's the better trade around 74 cents than selling it here.
That's interesting because you see this commodity rally is having legs.
Absolutely. I mean, and if we get another growth scare here, say China locks down for the next 6 months or so on and so forth, it just means less investment now in oil and gas and other commodities. And that's just going to mean a bigger supply shortfall later. And I think that's building. Moreover, I think Canadian balance sheets are in pretty good shape. Global growth will come back once China is through COVID. And everything is looking like blue skies beyond that once we tame inflation and turn the corner on that. But none of that trade can really unfold until we see the Fed take its foot off the brakes and until we see China start to open back up in some sort of sustainable way. So I think now we just play the waiting game and look for a bit of a safe harbor. And then when that all starts to unfold, the Canadian dollar will be among the best places in the world to be.
I suppose you've touched on this, though. If our currency drops, we import so much stuff. We have such an open economy. That's inflationary.
Exactly. I mean, it really will depend. Canada in the past has been able to weather it more than expected. I mean, if we have housing falling at the same time, that probably balances it out to some extent. Canadian jobs, they will stay plentiful as long as commodity prices stay high. As long as the consumer still has some money in his pocket. So, I don't see a point where we get this massive Turkey-style imported inflation really under any scenario.
So 74 cents, would you put a time frame on that? Could that happen in calendar 2022?
Yeah. Oh, absolutely. I think that this housing scare or correction, I think probably plays out over the next 6 to 8 months. And I think that's sort of the timeline that we're looking at, along with China, lockdowns. We have probably the main event of the year is Chinese President Xi and whether he's going to be reappointed. And that comes in the autumn. Mm-hmm. And I think China is probably going to stay on lockdown until then. So they either tame it or they get broken by COVID and go to something new around that time. And then everything starts to line up towards the autumn or towards the end of the year for the Canadian economy and risk trades in general.